Think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. And today we're joined again with Peter Grandich. How you doing today?
Always good to be with you, Darryl.
Yes. I've been diving into more, just learning a lot more about commodities. And I've told my audience I haven't published a whole lot, but I have been doing more research and doing my due diligence. And so I'm happy to dive in with you today and your expertise. And so we're in a new year, and many people have kind of like ideas of how the year is going to go, or what they are expecting, or what they are looking for in this upcoming or in this year that we're in. I just want to get your outlook for 2025, and what are you thinking for this year?
Well, this is my 41st year in and around the financial arena, and I would suspect that if I went back and looked at whatever I said in January of one year, when I got to the January of the next year, probably half didn't happen the way you would want it, you thought it would. So I think that's the first thing we should learn, that those of us that look into a crystal ball, we're only going to learn how to eat a lot of broken glass over time. Having said that, and not so much as a disclaimer, but a fact of life, I do think last year was a unique period. First of all, there was very few people expecting gold to outperform the general stock market, which it did. And of course, it greatly outperformed bonds. And it's done that since 2021. And ironically, that's when I exited the general equity market in favor of gold. So for me, gold has been very, very good. I do think this year it is likely to not uh, have the same percentage gain, but it will actually do better because I think there'll actually be declines by the end of the year in the overall equity market. And I still think bonds are going to have a difficult year, maybe not as difficult as a couple years ago, but I think it's going to be very hard for bonds to turn a positive because I suspect we're going to see a 5% or higher 10-year bond. And the reason I bring that up is interest rates and what other markets do have a direct impact on commodities. Uh, Certain commodities are very sensitive. So if interest rates are going to rally here in the early part of the year, with other main countries cutting their interest rates, there's not a strong likelihood that the dollar is going to go sharply lower because people are just going to plow money into it because it's a better interest rate payment. So I suspect that will curtail the rise in commodities. Now, I didn't say a decline. Normally, you expect a decline, but I think commodities have such bullish fundamentals, most of them, that while it may not go up as much because of that dollar rise, it's not going to go down a lot. And then as the year progresses and the dollar reaches its peak, then I think commodities will roll into 2026, please God, on a stronger note than they started 2025 with.
Yeah, so that's pretty interesting, and thank you for sharing that. So with the interest expense on the debt, I mean, we see that the Fed has cut rates a few times last year, and they projected lesser cuts this year. I don't know how true that is. I mean, they said inflation was transitory, and it wasn't. This issue of the interest expense on the debt, I mean, it's one of the top four um, issues with the deficit spending. And so I wanted to get your just kind of understand a little more, like how long can that go? Like is the government at one point going to put pressure on the Fed to cut rates more? Because I mean, we're paying a lot of money towards interest.
Well, I'll tell you this, and it hasn't been spoken about a lot in certainly the main general financial networks. We might certainly see other individuals who are on the internet speaking about it. How many people thought if they ever said that had any type of career in this business, like I said, I'm into my fifth decade. If somebody ever told me, hey, in the history, uh, the Feds go from raising rates to cutting rates by 100 basis points, what do you think happened? We would all answer interest rates declined because that's what they're supposed to do. Yet in this instance, we're up a full 100 basis points from the Fed's first cut to its last. And that I think is the untold or untalked about story that clearly the supposed reason for cutting interest rates is to make things less expensive, move the economy, all that jargon. And yet interest rates have gone up. And I think that's the big question. And I think the answer to that is what the don't worry, be happy crowd on Wall Street doesn't want to discuss, Darrell. And that is people are recognizing bond vigilantes expect, especially that we can't continue on this out of control debt spiral that has no sign of ending. There's nothing in the new administration. People can talk all about how other positive reasons, supposedly a Trump administration is good for the market and all, but there isn't anywhere in his platform or any discussion at all of austerity, of stopping this. In fact, I think you could argue that based on all the people he's promising to not have to pay taxes and all this other stuff, that we could see the deficit grow larger and larger. I think that's one of the three big problems there. I think it's out of control debt, which not only is on a federal level, but state, local, consumer, and corporate, but the clear retirement crisis, which people have not taken into account because there's two different worlds, if I may digress a little, Darrell. There's two different worlds existing now. There's the 10% and upper people. So in other words, the top 10% income people, not only are they not impacted, but they literally live in a different world. They're not affected by what you and I each day have to deal with. Now, the 90% of the world, many of those people are going backwards. In fact, now we're told one out of every four workers in America is using a credit card in order to sustain daily life. That can't continue, especially when the debt interest is, well above 20%. Uh, so a retirement crisis with two-thirds of Americans only working paycheck to paycheck gets worse each year because as everybody's getting older and unable to retire, listen, I can just tell you somebody that hit 68, it's a lot harder to live everyday life than it was at 48 and 38 and 28. And that's another with an aging population is going to play a role. But the third one, the third factor, which really no one's talking about, and I don't say no one, it's not part of the everyday discussion, and I think it's going to become an acute recognized problem in 2025 and beyond. And that's the crumbling infrastructure in America. Uh, let's not forget that we go all the way back to the first quantitative easing when Bernanke stood there with Obama after the 2008 crisis and said, we're creating all this money so we can rebuild America, and the money's going to be put to fix infrastructure and blah, 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 blah. It never made it there. It stayed in Wall Street mostly. It never made it to Main Street. And ever since, and don't forget, Biden also announced in his administration how they were going to fix infrastructure and all. I can tell you right now, in my home state, Darrell, uh, of New Jersey, there are considered over 100 bridges that should be closed down immediately. That people are concerned they can literally just fall on the ground. Now we've seen that and we keep treating them as isolated incidents, but A, they're getting bigger and they're becoming more common. Just over the Christmas holiday, 10 cities or towns in New Jersey suffered severe water main breaks. Why? Because the pipes that are bringing the water are anywhere from 75 to 100 years old. So if you want to buy into the don't worry, be happy crowd about, well, AI and quantitative, all about power, not only is our infrastructure bad, but our ability to deliver power. I like to joke that there's still some wires that were installed by Thomas Edison. I mean, that's how old and broken down the infrastructure is. So it may not be in the news tomorrow, but I think you better prepare for it if you're investing for anything past the next few weeks and months, that the infrastructure problem is going to come on top of the retirement and the debt crisis and be very formidable that no matter how bullish you are or how much you think Trump can be, whatever, there's some people think he can, he's almost the second coming of Christ being treated as. I think these are issues that go beyond his ability or his group to deal with. And other than divine intervention, I think they're going to get worse versus better.
Yeah, yeah, those are really good points. So, with Donald Trump's administration, I mean, I know that he really appealed to the working class American. He appealed to the blue collar workers and such. I mean, I remember at one point he went and worked in the McDonald's and such. And so, and I think that with the craze around AI and quantum computing and all of these things, right? And you mentioned like some very critical and concerning dynamics with our infrastructure. I mean, obviously our power grids, water systems, bridges, construction. Many of those different things. I mean, even if you look at places in China, like whether Hong Kong or whatever, it makes Times Square look like it was developed a long time ago or something, and so it's like it really those are some things that I've been thinking about. So with Trump's administration, appealing to these workers, talking about drill, a lot more onshoring of certain jobs or products or whatnot. I know that there's issues with critical minerals like rare earths and some of these minerals are predominantly produced in China and such. And so it does seem like this is a big task, and I don't think this is going to get done in 4 years at all. But do you think that there will be some positive movement towards just kind of changing that trajectory that we're on? Like, okay, let's focus more on like the hard stuff that we build, uh, the grids, the things that we actually need. Do you think there's going to be any direction towards that?
Well, I think for some people, just the fact of the change is very important to them. They feel that the past administration was taking this country down this horrible road. That's somewhere between a third and half of the population, just by polls, by the actual results of voting, and so forth and so on. I think there's still a core of people that uh, don't just dislike him, don't just hate him, but wish him dead. It's a terrible thing, but I really think that is a concern. And so I think he has to come out of the gate strong and successful pretty early on. He won't have that much of a honeymoon. Here's the other reason why I don't think he'll have much of a honeymoon. We know we elect Congress every 2 years, okay? And they just got by. I mean, it's such a narrow, thin margin right now. And it tends to be a little bit of reversal of the previous 2 years when the next 2 years come up. But there's also a lot of special Senate seats up in the 2 years from now. And there's more Republicans up for reelection than Democrats. And just as politicians are, if he doesn't come out, it doesn't look to be great to keep saying Trump and everybody's rallying around you. Some of those Republicans may, pull back some of their support. And there too, there's a small margin to play with. I think the issue is this. I think the normal beginning of the year, new administration, give the benefit of the doubt, uh, can carry the market, but I don't think it can carry it for as far as many people think, because if you just look at what the reaction was within 48 hours of the election and how the markets took off, and as you and I speak today, they've almost given all their gains back. The vast majority of those gains are back. We're past what I like to call the don't just say no to bah humbug. Between Thanksgiving and Christmas, most people bullish. The Santa Claus rally's kind of fallen on its face. I mean, there is one more day as you and I speak to it, but it hasn't been able, it went backwards instead of forward. And the last thing I think the what I coined the don't worry, be happy crowd, which is much of the financial service industry, uh, is this coronation type of belief they believe that's current and things are going to change dramatically overnight. I think two of the things that might have troubled me a year ago wouldn't be on high on the list anymore, at least for now. I think he will address the immigration situation, obviously a lot different. And I think there's going to be a lot more freedom of speech and a lot less cancer culture. I think those things will subside, if not disappear and go away. But I think the three issues that you and I spoke about are so enormous and are only going to get worse that they could overcome whatever other successes might be on the route. Let's put it this way, Darrell. The market's very highly priced. It's priced for perfection. That doesn't mean they can't keep it there, but it's very hard to keep some. When you're up at the top, it's very hard to stay at the top. Ask anybody that played on a great sports team. They don't stay great forever. Somebody else changes and the decline comes. I think the other thing is that there's a giddiness and a complacency that I've never experienced, Darrell, in 40 years among the financial service industry. And part of that reason is, and I hope you know, because you're a younger man than I, so don't personally take offense to this, but 40, almost 45% now, and it will get more each year, are in the business, haven't been, weren't even born when I started. And my concern is that lack of experience, which really has been for almost 40 years. The bull market in bonds is clearly over, but even there was a 40-year bull market. It pretty well was driving on a one-way street. If you learned how to get behind the car and steer and put your foot on the gas pedal, you did okay. I'm concerned that if we do have an inevitable bear market and it's not a crash, but it's just a slow multi-year, maybe even not go down, but not go up a lot. 7 out of 10 people I still see in my planning group, Darrell, they're living at least one financial level above that the money really earns. They're living beyond their means, and they're not incorporating the theme of our planning group is less is more. So I think early on here, as you and I speak in the first trading day, I think there's justifiable enthusiasm. There's no reason to run behind a rock tonight. But I do think that if we have a conversation 6 to 12 months from now, a lot of the enthusiasm or expectations that a lot of people are speaking about now will have been tempered, if not reversed.
Got it. Yeah, yeah, that's good. With so there's this dynamic of money printing, right? And the Fed's been quantitative tightening for a while. It's projected by many people that they're going to reverse that. I don't know if they're going to start quantitative easing or they're either going to really taper off significantly the selling of the assets off of their balance sheet. Do you factor that in the equation at all as far as like I mean, I'm sure you factor it in, but like how does that look when I mean, right now we do have a lot of fiscal spending. I know the Treasury general account is almost depleted, um, and money just has to keep printing to even keep this house of cards afloat. And so, what's your view on what the Fed does with quantitative tightening, and then also like are the money printers going to ramp up, or what are you thinking there?
Well, you said at the start of the show, I think a very good word. One word you'll never hear, and you're probably fired automatically if you say it anywhere within the Federal Reserve, is to use the word transitory. That's a word they never want to hear again because it the move of what happened there and the subsequently falling behind the curve instead of being ahead of it has really made more and more people, especially the big smart folks like the Stanley Druckenmillers, the Paul Tudor Jones, have become very concerned about the failure of the Fed. What I believe the Fed has come, at least in my eyes, is if, and I reminded myself during the holidays when I briefly watched The Wizard of Oz again, and I happened to turn in the point where Dorothy still thinks it's a great wizard and he's behind the curtain, and suddenly the curtain opens and they realize he's really no wizard and he really doesn't have the power that they thought. That's what I think has happened to the Fed. I don't think they're anywhere as powerful and moving as they once were, certainly during the times when I started in the business in the 80s and the 90s. So I think that's also part of the issue. And I think that'll come into play, especially if I'm correct about the 10-year getting to 5% or higher. I think what will transpire then is, one of the things that's also not being covered right now is still an overall general weakening in the real estate home end of the market. And it's become apparent that it's the most hardest time for people to buy homes. In fact, for the first time, and I don't ever remember happening during my time, it might have been the 40 years, but the first time new homes are actually cheaper than older homes, which you think would never be impossible because you'd rather buy something new versus that's old being equal. And I think the interest rate part of that is really going to change to make that even more difficult or break. And one of the concerns that I'm seeing now, it's not being spoken a lot, but we're seeing a lot more homes for sale, and that includes condos and townhouses, but we're also seeing them staying on the market a lot longer. And so that is a key factor. Most at the car business, which is another key part to our world economy, I forgot what the percentage, but it's very large now, are what people are called upside down. They owe more than their car is worth. So they're not a new car buyer anytime soon. And there's nothing you can really do for them once they're upside down. So I think the key things like homes and cars and other things are all part of an economy that's been up on steroids and silts. And while there's this present view that as soon as Trump takes over, he can only make it better, if he doesn't or he doesn't do it quickly, then I think the realization of what's been underneath the carpet will rise, and that's when the troubles will really hit the markets. Mostly stocks and bonds. I don't suspect it's going to be, a trouble for the metals market, so to speak.
Yep, got it. So speaking of the metals market, I mean, gold's been the physical metal has been finding some support around 2,600. It's touched 2,600 a couple of times, bounced off of that level, and so obviously this metal is a form of insurance. It's a form of hedge against the many risks that we've talked about and covered on this episode. What's your outlook there? So obviously we got the disconnect between gold and the miners and such, and gold's still staying pretty elevated. So what's kind of your outlook on the yellow metal?
Yeah, let's look at that in three ways. Let's first look at the physical bullion. My feeling, and I think people should ask, is when they look of the tremendous gains it had, what really caused that gain? Well, we know really two reasons behind it, and it's not guessing. You can see it because there's proof for it. One is the tremendous amount of central bank buying. It is it has overwhelmed the paper market. And I think that is very, very critical. And the only two reasons that one can assume that those central banks have bought massive, because they're not speculating, they can't churn it and flip it to someone else. There's no one bigger to take it from them, is that they're buying it for two main reasons. One, they recognize that paper assets in general, potentially US assets, could be coming very overpriced. One of the reasons why several of them have been liquidating a lot of the US assets. But there's going to be a change in the monetary system sometime because of all the world debt that's being created, not just here in the United States. Two, I think it also is because of of the formations of the BRICS. I've been a staunch believer of the BRICS. I'm not rooting for them. It's not in my best interest as an American because they basically are going to be not wanting to deal with America if they don't have to. But I really believe that's going to continue and grow larger and larger. And eventually gold will be used in some form with them in order to trade, whether it's just between themselves, an alternative to the dollar, whatever it may be. We're still probably 1 to 3 years away from that. So I think the physical bullion market still should continue well. I still said, and I said it when we just got above 2000, that we'll get to 3000 without ever going under 2000 again. I think that's coming. And 3000 is just a round number. There's not any specific reason to take that. So the bullion market should work higher.
Hey Peter, really quick.
Uh,
With the BRICS, I know that there's we've been on this Bretton Woods system since like the 40s, and then Nixon took us off of. I was actually watching a documentary on the Watergate scandal. I had to look in it. I've heard about it, but but I never researched it. But Nixon took us off the gold standard, right? And so it I hear a lot of talk about there needs to be a new financial kind of regime or change or whatnot. And are you viewing the BRICS within that context, that broader context?
Yeah, I think the BRICS will use gold in some form, whether it's just internally on how they trade with themselves, potentially introduce some sort of currency or some type of basket that would include other commodities as well. I think the third chance, or the lesser of the three, is that they're going to introduce a whole new system to, to replace the dollar. I don't think it's in their best interest to do that. But I think that's coming, and that will keep the support for the physical bullion. Now, there's two things that I'm anticipating to happen that in order to get gold much higher, if you want to believe in much higher prices. Crypto cryptocurrencies have been eating the lunch of not as much gold, but the miners and especially the junior market, which I'll talk about in a moment. But it's also prevented some people who would have probably normally bought gold as a hedge. And right now they've tried hedging themselves in cryptocurrencies. I think as that market gets unmasked and people realize how much is being lost in these meme coins, for instance, a really nice guy that I've known for a while, big silver bug, huge daily show comments, just got out of that market to introduce his own meme, and he's into that. And these are all the things that happen at peaks, not in valleys or at bottoms and all. But I do think once the cryptocurrency market speculative fever slows or reverses, that will only aid gold. It'll continue to go because there's so much demand from the central banks. But when the public, which last year was almost a net seller of physical bullion, switch and become buyers again, that'll aid it. The miners is a two camp. There's the main big producers, and even within there, there's a few of them that are having their own troubles and others that are doing really, really well. But most of them are just producing, they're almost like printing money with their free cash flow. So I am looking for a banner year of M&A in the metals and mining industry. And one of the main reasons, and again, 98% of people listening to this should not even think about doing it, but I really plowed a lot of money into the junior sector, the smaller explorer types. And the reason I've done that is not only historically are they the most undervalued they've ever been, but at the end of the day, if the don't worry, be happy crowds riot about growth and all the things that we need and EV and all that stuff, the need for new metal discoveries in order to sustain or even grow economies is so acute now. And because these majors are in this printing mode of free cash flow, I suspect that they're going to look to buy things that are already in the ground, selling for 20, 30, $40 an ounce versus spending between 150 to $300 an ounce to do grassroots discoveries on their own that will take 5 times longer to develop than something they can buy that's already either in production, going into production, or has a good chance to go into production. So I think it's going to be the best year in a lot of years, and I put my money where my mouth is with that. But it's the highest of risk categories that one could consider, where most individuals should just focus on physical bullion and a little sprinkling of, major producers or royalty companies. For most people, junior resource stocks have to be treated as a pure gamble.
Got it. Yeah, I mean, I kind of view them as speculative in some ways. Obviously, they are a critical part of the process of getting extracting gold out of the ground. You got to have somebody to go find this
Gary, I
stuff.
hate to interrupt you, but it's not just gold, it's silver, it's copper. You mentioned even earlier the critical minerals people have not recognized. You think they would have learned in COVID when we woke up one day and we found out a lot of things we need were not being made here in America? Well, when it comes to metals, that is absolutely the case in point. And there's these metals that have names that are still hard for me to pronounce, but they're so needed in defense and computers and chips and all. And 80 or 90% of their suppliers are not coming, they're coming from areas of the world where aren't exactly friendly with the United States.
Yep. That's true. And so, so with the junior resource, and I mean, even I mean, you got junior miners, you got exploration companies and such. I have a little bit in some exploration companies, but some people do view them as more of like the speculative versus like the bigger miners. I do want to go back to a point you mentioned with crypto, and you and I we've talked about crypto, and I know your views on Bitcoin. I don't know if that's changed at all or not, but but I know that the upcoming administration, like I mean, Trump was at the Bitcoin conference. I think JD Vance owns Bitcoin, and there's some bills that they're supposed to draft to try to get a strategic Bitcoin reserve and such. And so for me, like I view a lot of this stuff as like speculative. And so I've made some money in it being speculative, but it hasn't been something where I'm selling a house and putting all my life savings into. So I just wanted to get your take on like if the United States government does go down this route of um, Bitcoin and things like that. What are your thoughts there? I mean, because it's coming up. It's in the news a lot.
First of all, I think there's more of a chance of the New York Giants playing the New York Jets next year in the Super Bowl than I do believe that the Bitcoin will be made into a U.S. reserve currency. Okay, I think that actually is preposterous, and anybody that truly understands economics. So first of all, you can't have a reserve currency in something that has volatility that it has. Forgetting the argument that there's no intrinsic value. It's the greater fool vision for a lot of these things. It's a combination of multi-marketing and Ponzi scheme. It is most meme coins, that's all they are. They really are. It's just a hope that more people would want to buy than sell. And if you get in early enough, just as multi-marketing is, that's where the success comes from. My biggest problem with it, Daryl, is that the biggest proponent of it, the household name about it, was a person a couple of years ago was telling people to sell everything they own, stocks, bonds, real estate, borrow if you have to, not even put it across the cryptocurrency market, but just into Bitcoin. And the reason that troubles me so much and prevented me from ever wanting to be involved, that's the first rule in investing. You never put everything in everything. If I came out and said that about gold or any penny stock and all, they would hammer me from the SEC should be at my door. Now that guy became a proponent of a company which really has become a facilitator to the Ponzi scheme because the stock goes up, they borrow money, they buy more Bitcoin with it. That supposedly is going to cause the stock to go up more, and it becomes a self-fulfilling Ponzi scheme. But here is a person talking about not projections, but saying it's going to 300,000, it's going to 5 million. You can't do that. We threw people in jail in the 80s and 90s that did that with penny stocks when they were telling people it's going to $20, it's going to $100 and all. So I have this disposition, and it's important that you know that I will bet against people like that in the long run, not on them. Separate from that, it's still it's still a speculation looking for a reason to be around. They've changed 4 or 5 reasons for why you should own it all. There's no question about it, as you said, that it's been the marketing end of it has been extraordinary, which could still take it a lot higher. I am certain during the tulip mania, there were tulip experts. There might have been a sailor tulip expert somewheres who gave all these reasons. And quite frankly, as people were seeing the money being made, but I'm afraid it's going to go down this similar way. And I can just tell you this, when I start seeing individuals, and this particular person that happened over this holiday day, who was so enthusiasm behind silver, and to leave all of that just so they can produce and talk about a mem coin which they've started, that's the classic sign of things towards the end, not at the beginning. The world has never been, you'd be talking about a whole change in the world where suddenly everybody lives happily ever after. And it goes against, you and I as strong Christians, it goes against the Christian principle as well. So can it be taken higher? Yes. Will it become and replace gold or be a reserve currency? Like I said, I'd sooner bet on the Jets and Giants playing in the Super Bowl next year than Bitcoin becoming a world reserve or a reserve currency here. But is it marketed beyond Anything imaginable? Absolutely. And the people that should have been speaking about it, these so-called financial networks who actually support and give these people a home base, that I'd be 10 times more mad at them than I would be at the guy that's actually doing all the promoting.
Hmm. Yeah, I mean, for me, like I am looking at the next potential, uh, I guess, big scam. I mean, last time we had Celsius, we had FTX with Sam Bankman-Fried and a few others, and it's almost like every cycle with Bitcoin and crypto, you get these big, imposters and Ponzi schemes that come up, and um,
Well,
so
you
I
have
mean,
to ask yourself this, Darryl. This is very important if you don't mind me, because I appreciate you giving me the time to say this. If you think about all the buying that's supposed to have been done already, all the people with $1 million predictions and everybody's out there every day. There's these groups and so forth and so on, with no one really saying to sell. There isn't anybody, other than Peter Schiff, who might have been, since day one been against it or something. So all this buy-in and all this creation that this micro strategy has brought the buy-in, and it can't even really get really any on either side of 100,000, and it was just 70 something thousand a couple of years ago. So the enthusiasm and the painted belief versus the actual results have been dramatically different. You can only keep pumping for so long, and then eventually somebody down along that chain stops. And once that chain stops, it becomes a domino. And that's how I feel the inevitable breaking. Now, it may still come from a higher and maybe substantially higher price. But that's what's going to happen, because at the end of the day, they can say all they want and all the other stuff. But when the people ask me, well, what would change your mind? The day I see central banks buying Bitcoin and not gold. You like it or not, whoever has the money controls things. The central banks are still in control in the world, whether or not you can make fun of whatever you think of their thinking and all. And they're not going near it with not a 10-foot pole, with a 100-foot pole. By the way, Daryl, last thing, the interruption. Anybody that sees this, 9 out of 10 will be sending me an email to tell me how wrong I am, and I get it all. And can I tell you that? I take that as an indication, because one thing about the cryptocurrency, it's a cult, because they won't even consider anything but what they believe. They won't even consider as a potential to even say, yeah, you're right. Maybe Grant, you may be 1,000,000 to 1, but I do respect it. It is 1,000,000 to 1, but it is possible. No, it's not possible. You cannot understand. I can't tell you how many people tell me some in a nice way, some not nice way. It can only go up. There's no way it can't go up. And when people have that attitude, it's destined for trouble.
yeah, yeah, that's very very problematic because there's a bear case for everything, and I mean, and right now the one of the bear cases is this thing with quantum computing and will computers get strong enough to eventually hack Bitcoin and we know that cybersecurity. I mean that's a major risk to a lot of places. I mean, I'm seeing articles now of spies and the cybersecurity stuff, and I mean the healthcare industry has been
Oh, very
ransomware.
good, Darryl. We just had the Treasury announce that their computers were hacked. The Treasury Department.
Hmm. So, so yeah, so there's definitely some risk there. So leading back into commodities. I mean, this. So even if, like, let's say Bitcoin or whatever, like Trump mentions the United States being the leader in cryptocurrency. You got to mine this stuff, and ultimately it comes back to commodities such as uranium, natural gas. I mean, you need the copper, you need all these things to even make these warehouses even run to even mine this stuff. Um, so, what's your outlook on like some of those commodities? Uranium, copper. That are pretty much. I mean, very much needed, and yeah.
About 2 weeks ago, after it was ironic, in early January of 2024, after riding uranium from under 20, I moved out of that market when it got above 100, and saw our stocks up anywhere from 100 to 500% or more. about 2 weeks ago, I noted that I thought uranium was becoming positive again, but I was only going to re-enter if they came down another leg. But I still think the uranium story is a phenomenally good story. I don't see any reason that people need to run to the hills for that if they still own them. I like the copper story, especially when it gets around $4. I just think, as you noted, the demand for it is going to be so acute. And again, we went through another year of less and less major exploration, higher costs to get it from areas. So that story just gets better. I do think that uh, the off metals, the metals that are considered critical, which are very thin, it's not like huge supplies or a lot of mines that find them. I think what will transpire is the news event that concerned me over the Christmas season was when China and its leader basically came out openly and declared that they're now going to build their military to a level not seen since Germany built up its war machine in the 30s, and also that they came out and absolutely said Taiwan and China are going to become one. I think that's an inevitable thing to face. And where that runs into problem is where chips, the Taiwan is the backbone to chip manufacturing and all. And do they wait out 4 years of Trump so they don't, I don't know, but the one thing I've told people is you better put that in your geopolitical model. A, they're going to spend an enormous amount of money. Some people think they rival our military. Some will argue they're not quite there yet. But if they are, and they've always are people of the words, when they say they're going to do something, they go ahead and do it. Their military could surpass our strength. And then, of course, the Taiwan issue opens up a very delicate geopolitical issue because of how much impact, as I just said, it would have in the chip manufacturing and all. So I think we have to keep an eye on China. And somebody said to me the other day, well, they're having their own problems. I said, now you got to keep an eye on it for more. And they said, why? One of the ways governments get people to forget their own problems when they point to somebody else and say, hey, the reason we have this problem, it's those guys over there. And a war or a more heightened uh, China aggressiveness could rally the people to forget about some of their domestic issues and all. So I think China should not be neglected when people take into account their investing, particularly in their geopolitical models.
So, in thinking about, I mean, that in terms of like uh, I guess the food chain with military, right? I mean, the United States. I mean, we have close to $1 trillion budget with our military. Then China's next in line at 330 billion. But I know that we've done a lot of sent some of our military equipment and stuff as subsidies to like Ukraine. I think we may have sent some to Israel or whatnot. So I don't know how that factors into like or whatnot. But do you think China would increase? I mean, if they come out and say that, say if they came out and said that, it just sounds like they did. Do you think they're going to increase their budget to kind of rival with America or
Well, what
whatnot?
they said, what they've said, Darrell, is that what they plan on spending, we will not see a country increase their type of spending. Last seen was when Germany did what they increased percentage-wise in the 30s. Let's keep in mind that this is sad because I hate talking about this as a Christian, but I don't think the wars that we talk about in the future are going to be just man versus man, some guys, fighting each other on the islands with a rifle. I think where you see it and you can see what they're already been developing is high technology weapons, drones, things of that nature. Don't even want to think about nuclear. But I think that's the type of issue. One thing somebody said to me that was very bright, and he's a retired captain for a lot of years. He captained a big battleship, and he lives in the community here with me. And he said that whoever controls the seas controls the world economy. And the Navy, which used to be second to none, everybody said we were always, that was the same thing at one time when Great Britain was a power around the world. They controlled the seas. And China is now building up a very strong Navy as well. And Like I said, is I don't like talking war on war potential, but I think it'd be a mistake for people not to at least have it in the back of the mind and to understand that if you're investing for several years out, this is something that has to be put into your formula.
Yeah, yeah. And so, just on a last note, and so with China itself, I've listened to Ray Dalio talk about, um, China, his view that China's going to be the next, superpower nation or whatnot. What's your outlook there? I mean, because this obviously highlights some things of like a trajectory that they're on, or that they're or how they're thinking at least. And this may not be for another 20, 30 years, who knows? But what's your outlook on China as a whole?
Well, I'll say it to you this. If you're like me with gray hair and no hair, it's not as worrisome as it is for a young man like you who still has a lot of his life ahead of him. I think the younger you are, the more concerned you should be about it. I do think that more importantly than just China is to understand that the United States is not the dominant force that it once was. And even though there's some feeling that clearly Trump will make us feel better and work towards a better strength than the last administration had done, I think there's obstacles and things that are now beyond anything that he or his group can do to bring it back to such a level. I also think that one of the things about Trump that he doesn't get credit for is because it's the slogan that the other side hates, make America great again. I just think focus on America again would be a better slogan, meaning that before we run over and gave so much money to Ukraine, and how much money did we spend in Afghanistan? A trillion. What could that money have done better here to our inner cities? And why are food banks so overrun now in the United States? Why do so many people struggle to even worry now if they're going to keep their lights on? I kind of think more of a focus on America again versus make America great. Not that we have to be the world dominant, but let's first take care of our own issues before we run over and worry about somebody else's issues. That might have, for me at least, that would have been a more appropriate way of going at it.
Yeah, yeah, for sure. And I mean, and to the point you mentioned earlier, I mean, even if Trump and his administration makes some progress towards getting America on a better track or a better path, um, we still have so much divisiveness in our nation, to where if the next administration get in, they're trying to undo what he did and bring us 3 steps backwards or whatever, and so it's just like, yeah, I feel like we're kind of in that doom loop or whatnot.
But you know what? To close on this, and this is important, I say this to people. My wife is a strong Trump supporter. I voted for him, but I don't believe he's the second coming of Christ, as clearly some of her friends think it is. The issue is the group that doesn't believe it, not like me, but really dislike or hate him. They demonstrated already what they would resort to prevent him. I mean, it was clear that they resorted to illegal and lies and deceitfulness. What I say to people is if you think they're just going away on January 20th and coming back 4 years from now, I think you made a big mistake. And I think they're gonna be more vicious and resort to even worse things. Whether or not they're successful is another matter. But to think that there's going to be harmony and so forth, let's not forget in Biden's inauguration speech, he talked about bringing the country together. I think the country's more divided now than it was 4 years ago.
Hmm. Yeah, yeah, yeah. Agreed. I mean, yeah, and the assassination attempts and all of that on Trump's life, like it's people are very delusional, and yeah, it's bad.
There's no middle ground there. You know what? You meet people, right? There's really no middle ground. People are either hard left or hard right. There's moderates, or we used to have a word, conservative Democrats. They were. Uh, and it seems like you're either on one side or the other. And although I do think there is, and that's why the independent movement or the independent voters have more of an influence on deciding political races, not just federal, but on the state and local level. And I think there's going to be more of a movement towards that because there's this people at rhinos, Republicans in name only, a lot of some strong, more right Republicans think they're not, it shouldn't even be called Republicans. I think those people are going to fall more into an independent group. Not that there's going to be a third party within 4 years, but I think more middle ground thinking will come from some people leaving the hard left and the hard right over the next 4 years. But we'll see.
Yep, for sure, for sure. Well, always a pleasure having you on, Peter. I'll be sure to link to your website and your X account in the description below, so you all can be sure to connect with Peter and follow him on X for some of his insights, or even subscribe to his newsletter. So, thank you for coming on, brother. God bless, and I hope that you and your family are doing well this holiday season.
Well, Daryl, you're a man that wants to go out there and do the right thing based on the good book. So you always have my time, and I'm always honored to speak with you.
Yes. Thank you. All right, take care.